Well, hello, folks. Top Gun here with you, and I got a good one for you. So, it's Sunday night before the week opens up, and all the chaos lets loose. Capitulation is coming. It's coming. Apple's not doing so good. Neither is Tesla. More and more class action lawsuits mounting up against the two companies. Oh, and someone is even actually in the States looking at pursuing them against antitrust laws. Oh, finally taking a peg at the monopoly. Ooh. Also, we have had Bitcoin miners declaring bankruptcy this week. I wonder if they saw my video and went, oh, we're doomed. It's never going to get better. We should just take our losses. I could like to think so. I would hope so, that my videos are educating people and helping them do some critical thinking to maybe make better life decisions, as mining Bitcoin for the personal investor is probably not a great life decision. Not very profitable, and neither was mining Ethereum. However, there's some things going on with that proof of work. Interesting. So, this has been a crazy month. The Fed has come in extra mean. Powell is scowling, and we have more things going on. We have earnings reports this week, which won't be looking so favorably. So, we do have some market report stuff to look at. That's not the market report stuff, but financial calendar for this week. Market watch. Whew. All right. So this week, National Activity Index. Not going to be very interesting. Basically, a bunch of Fed zombies talking that'll all be driving home the same point like Powell did. So nothing really new. Just more agony in the market sentiment, crushing that demand. Then more Fed zombies, and then Powell speaks again. He has been doing good with his words and quashing the market. Dark Powell with the dark laser eyes. Durable goods, don't care. Core capital goods, don't care. Another Fed zombie, don't care. Case-Shiller from U.S. Home Price Index. U.S. home prices. We will be interested to see how the housing market is faring with those. Oh, you've seen the memes going around Twitter. That's right. The houses come down 10%, but it costs more, really, with the inflation rates because everyone's getting priced out on times. So those prices still have to come down further. Be interesting to see what's going on there. Then another Fed zombie. Then the confidence index on Tuesday and new home sales. So all about the housing market on Tuesday. On Wednesday, trade in goods, the advance report. Nothing too exciting there. Another Fed zombie. We don't care. Pending home sales index. We don't really care about the pending homes. Jerome Powell delivers opening remarks. Ooh. All right. And then another Fed zombie speaks. And then another Fed zombie. Oh, it's a week of Fed zombies, folks. Jobless claims. So bullish would be to see the jobless claims going up. Unemployment rate rising. I still don't think we're going to be seeing it enough. It's not going to be what Jerome needs to see. So it's going to be bad news when it comes in strong. Then, gross domestic product, GDP. So it's going to look at the actual GDP for Q2. Who thinks it went up? Really? You raised your hand? You're the only one. You know that? You're making everyone else uncomfortable. Put your hand down. Okay. So, yeah, we got GDP. When that comes in negative, that's going to be things Powell wants to see, technically. More pain in the markets. And then Friday, the PCE and the core PCE. That's what we're looking at. And the rest of it is just kind of prattling on for the rest of the day. So a lot of painful tidbits coming out amongst earnings, which probably won't be really good. And then, should I teach you guys how to look at the options market? Options trading. Apple. Boom. All right. Let's go ahead and have a look. All right. Why do I get so curious about this? Oh man, oh man. So when we look at the options market, we get an idea because a lot of people don't really buy stocks anymore. It's more of a whale game. It's the market maker and BlackRock and a few billionaires really buying most of the stocks. I mean, most traders, they open puts and calls in the options market. And so we look at the put volume to the call volume. And we have 484,000 open put contracts, short contracts, expecting to go down. And then total call volume expecting to go up. 305,000 versus 484,000. That means we have less than 60%, approximately, of the call volume to the put volume. Or another way of looking at that is approximately 160% of the put volume to the call volume, as in favoring those puts. Now we look at open interest total, and we're not that. So ratios. Oh yeah, look at that. The math I was doing in my head, 159%. Oh, cute. That's what I get for rounding up to 160. I'm wrong. Oh well. That's what I get for doing the math in my head, not in Excel. So I look at the options market to try and figure out where the pressure is going. How many open puts do we have to how many open calls do we have? How many of those open contracts? Where's the buy pressure? And by doing some math in here, you can tell what the market maker has to do to hedge its bets. And you can tell what its next moves are likely going to be and whether it sells the stocks or buys the stocks to hedge those bets. And capitulation's coming. The sentiment is getting nasty. Apple is losing the confidence. The selling is going to start. The capitulation's coming. Tesla and Apple are going to get knocked down. And you know my thesis on this. The trend is your friend until the end. But where is the end of the trend? So forget the yellow lines and look at the green ones. This is the macro trend. These yellow ones are the micro trend within the macro trend, while I'm looking at the daily, not the hourly or the 4 hourly, not zoomed in even further. And yes, I said short here. I said short here. And then I said close those two shorts down here. Then I said open this short, and you might have rode it up in some pain if you didn't have a stop loss. But then you would have rode it back down to be in profit. And I said open a short here because he gave another freebie. So 4 shorts in profit if you didn't close the overly excited one. That's my bragging rights right now because Apple is going down. And as it goes down, it will, because of ETFs, inherently affect the NASDAQ and the SPX. Okay, why do we care? Because of ETFs and grayscale. ETFs and grayscale link crypto to the NASDAQ and SPX. Yay, Bitcoin. So Bitcoin is going to see more pain when Apple does because of that link. The tide that rises all boats and the tide that sinks all boats. It's an unfortunate thing. So as we see the pain in Bitcoin, we'll see the pain in Ethereum. And then what's interesting is we're starting to see some decorrelation. I've gotten excited before in HEX, so I am a little bit nervous to get excited again. But we do have... I'm going to have to switch to the 4 hour. All right. Ooh. Bottom. Bottom. That would be a double bottom. Then the double bottom, if we zoom in, the double bottom double bottomed. and turned into a nice W reversal pattern. So now we see, look at that, Bitcoin going up, Ethereum going up, and HEX not moving. They were going down, and HEX was going up. I think we are seeing some decorrelation here, which gets me more excited. Again, I wanted to see this double bottom happen when Apple crashed. That, when Apple is done crashing, I will get so bullish. Because I'll know that the most of the capitulation is done, and HEX will be a lot freer to trade. Because it won't have to worry about the liquidity pool with Hart's Law, with Ethereum, linking it to Ethereum, and Ethereum being linked to Bitcoin, and Bitcoin being linked to Grayscale, and the dominoes. You gotta follow the dominoes. So, I find this kind of exciting. That maybe we're heading to our middle W stage as we go into Pulse Chain launch. And people want to scoop up some HEX and play around. Because again, we've got Maxi coming out with the Decky, the 10-year stake. Well, multiples from 2-year to 10-year, like bonds. A 2, a 5, a 10, and I forget if it was a 3. But I know they had a 2, a 5, and a 10. Maybe one of them was a 1 year. So yeah, there's that 10-year might be the largest HEX stake ever. So many people will be bullish for it. 500 million HEX could get locked up off the market. I thought about even tossing in a few coins. I think that's pretty cool, and that is some more bullish access, because we know every coin that gets locked up, that's not sell pressure that can happen on this chain. Again, it'll have to come from someone else's wallet. So there are a few bullish things where this is a smaller community, smaller liquidity. There are a lot of rich buyers, and the rich are the ones that get affected the last in inflation. They still have their money. This could be a hedge asset. I've been fooled so many times, though. I need to see Apple crash to know what it's really going to do to the market, to know what the future's like. With that being said, yes, I may have bought some HEX in the dip because I love my bottoms and I missed my bottom in June, so yeah. I bought some. I wasn't missing this. I'm DSAing in. You know what? Even if it goes back down lower, I still feel good about buying a bottom. I love my bottoms. And with that, we will get around to talk to ETH. Pow. Not really giving Fair a lot of credit. It really seems like an afterthought of an afterthought. But at least ETH Pow as an afterthought. It opened, it dipped, and it's coming back to its opening price. So interestingly enough, like, it opened at $30. And right now it is literally at more than about a 99.1% discount of normal Ethereum. The proof of stake Ethereum, which is getting ragged on even harder as maybe being a security and having centralization issues, points of attack. I don't know. There's a lot of weird, funky sentiment about it, but the money's not disappearing. At the same rate, after doing proof of work math on Bitcoin to see how unsustainable proof of work networks are, well, Ethereum doesn't award its tokens the same way, and it can run on smaller amounts of validators. The hash rate slows, apparently according to Crypto Coffee, or Coffee Crypto. Oh, God. Dyslexia. I really watch his shows. I like him, but I just get it flips. It flips. One of these days I'm going to make a post it off screen. Anyway, yeah, and people wonder why I sound like I've had brain damage. Maybe because I've had brain damage. I don't know. Oh, can you imagine how sharp I was before the brain damage? So anyway, looking at Ethereum POW, the thing is they don't award the tokens the same way as Bitcoin. Bitcoin constantly halves the tokens, which means the tokens have to double in price for the miners to make the same amount of money. Now, Ethereum can scale and go through periods of higher inflation and go through more deflation. It's an inflationary and deflationary system as proof of work. So they are running on less validators, essentially, no matter what, for the network to run. Somebody's got to be incentivized, at least in a small amount, or a small way, potentially. So, I mean, generally, one would assume has to be a small amount of cell pressure to run the electricity. So I don't want to get too nasty on that. I mean, even validators on POS still need electricity, still need a network to run. Bitcoin is highly viable, unsustainable. But Ethereum proof of work could be viable. Now, to be a miner, I don't know. If they are really suffering from a huge exodus of miners, they need the price to be higher to make money, but you could mine now and save the coins for when price goes up, maybe. Proof of work, again, like these, basically they had their business rug pulled on them and were out of the job, so they started a network, hat in hand, please buy our Ethereum tokens so that we can keep the lights on. So there has to be enough economic pressure to buy enough tokens for them to sell and keep their lights on, and enough buy pressure to still raise the price on top of that. So if they need $1 million to sell $1 million for their overhead costs, well, $1 million needs to go into that liquidity pool. Ideally, $1,001,000 or more, so that the price can still go up, because we love when price goes up. So it's a bit of a degen chain. Why hasn't it died? Oh yeah, hexagons, we're all degenerates. That's right, there's hex on this chain! Woohoo! And as you can see, Hexologist Shmita has not been hitting the sell button on this one. No! Bad Shmita, stay on Hexologist channel. Just stay off mine. Look at that, no Shmita hitting the sell button on this. We're actually getting a nice trending chart on here. And yeah, you know what? Just for the cause of another green candle to hopefully get another noob to look at this and go, what's Hex? And come get onboarded and saved. I might just spend some money even if the network dies. Just for the green candle. Just for the free advertising. Well, it's not free. I gotta buy it. But, you know, it's advertising that I'm paying for. And then the chain might not die. So there's a slim chance I might still get my money back while advertising. Of course, I'm considering it gone, a write-off. If I go throw it on, like, I already have Hex on this chain. I don't need to buy Hex on this chain. I got my free Hex. If it trades up to parity, exciting. So, yeah, I don't need to buy here, but it's for the cause. The same reason I actually did some sacrifices, not for profit. Literally, not because I necessarily believed in the sacrifice, but because I believed in the programmers, and I wanted to see them keep working and building. Even if I didn't expect profit from what they're currently building, they're building good stuff, and that one day it's going to turn huge amounts of profit. I'm one of those long play kind of guys. I mean, Hedron seems like a really long play, but there are some other networks. I will say, as an avid Doctor Who watcher, and one of these days I'll do a good Matt Smith impression for you, but as a good doctor, the Doctor Who, we do love our space and time. Proof of space and time. I have to do some more research on that. I mean, a chain governed by Time Lords. How could I not be intrigued? I gotta go do some research on that. I'm talking about it a little bit because, like, I like it, but it's got its problems. It's nowhere near ready. It's a long man's game. I don't know. Maybe in some ways it is near ready. Yeah, I'm not going to bring it up on this because I'm still very pro Hex and I'm very pro Pulse Chain and just want to see that going. And I can't be getting distracted picking up pennies in front of trains. I mean, I like living an exciting life, but one of these days I'm not going to get off the track in time. So, no, I don't actually like to be that risky. I've gotten lucky being risky on some things. No, I will do another video on this separately, maybe even a separate channel, because it's a whole separate concept, a whole different way of doing things. And yeah, I don't know how sustainable, like, it might be more sustainable, but not very profitable. And in our community, that's not what you guys are interested in. You want the mad gains. So, I put out a video on warp drive engines, which will be required to probably make interstellar mining of the asteroid belt viable so we can get all those precious minerals we need to build more EV cars. So, will that be a sustainable technology and something to invest in? required technology and something to invest in? I think so. I do a video on it and no one watches, so you guys don't want to know when I'm really popping off the brain power. You just want the quick gains. I'm not even giving you the quick gains. I am a slowpoke. I like playing the long game. So yes, Hex is faring to the point where it did get all the way up here. Look at that. 10% of the value. Now, granted, the liquidity is at 38K. It's not there to withdraw, really. But oh, wait, I'm a shy shrimp, according to someone's free claim. That's right. I mean, that's right. My hex on that chain right now. Oh, yeah, there is more than enough money in that liquidity pool for me to get my value out. I'm not a very big guy, and that I don't have a whole lot of hex. I guess I'll just out myself and say I don't know if I even have enough hex between all of my different places for one T share. I bought some P shares and I put some in Maxine, yada yada yada. But I don't know if I have enough even for one T share. The T share price being just shy of 25,000 coins. So yeah, 25,000 coins on this chain. Yeah. That's right. 25 bucks. Or no, maybe 50. I'm not actually doing the math, but I don't want to, because I don't actually want to be tempted to take it out there. I don't want to cause a red candle for sure. I love the green candles advertising over here, so I'm quite content leaving my coins on there and not playing. However, looking at this chart, it does make me curious if I should spend that 50 bucks, dinner, a movie, and just get a few coins. I mean, I was going to, and then I found out that these proof of work miners did something really cool and did delete one protocol. So end staking your hex on this chain in the future, if it doesn't disappear, will actually be a lot cheaper than on Ethereum proof of stake. So with that, I'm like, oh, so I don't need extra Ethereum to end my hex stains on that chain. Interesting. But I mean, I will need it for gas and other things, so just in case the chain lives and this is that initial opening dip kind of vibrate here at a huge discount, yeah, I think I might have to next week. Hope the price chart hasn't gone up because I already bought Hex this week. So next week's pay, I think I'm going to have to scoop up a few of these and divert just my $50 DCA to get some Ethereum on this chain, just so I can use one of those Ethereum coins to buy some Hex coins, make that little green wick, feel proud of myself for helping, and save the rest of the Ethereum coins for gas in case the chain lasts, and staking. Maybe I'll do a proper stake ladder on this chain. Because Alex, thanks again for building working dApps right away so we can get into stake our Hex. Oh, you're so cool. But still, this is just a distracting toy for me, this Ethereum proof of work, until Pulse Chain launches. That's the only real fork that matters to me. So please, would you launch it so we can stop degenerating around in these chains, Richard? Come on. Golan. It's not that complicated of a language. It's server-based. Now, the audits can take a while, though. And timing the market, like he said he wouldn't want to wait, but with the market conditions being what they are, I think he would have changed his mind on that. Then again, I'm not psychic, I don't know the man, so I shouldn't be commenting. And I'm not even going to rant about that today. You guys have heard me rant about that one enough. I just mostly wanted to come at you with, I'm not as bullish as I'd like to be because I've been fooled too many times this year and Apple hasn't crashed yet. But if you take those mass fundamentals out, this is a bullish TA pattern. Volume has disappeared, which is indicating the sellers have gone and effed off. And that means if the sell pressure is finally done, we've had capitulation, it won't take very much buy pressure to get the price to finally start moving up. We'll be able to know by keeping track of that volume, and it's a little easier by the day. All right, so we had a really brutal patch, and then the volume increased as we bottomed out, and then it's decreased at this bottom. That's an indicator. The volume going down. And sorry, there's a pattern you can tell. Oh, doesn't that look sexier? Wicks. Oh, all those wicks from the daily. That's even more bullish. Higher low, higher low, higher low, higher low. Oh my. And this feels like we have established a buy wall or something. Like, oh, please fill our limit orders. Interesting. I like you, that line. These are things that are making me feel a little bullish. This is all very sexy, healthy changes in the chart behavior, but it could all come to a very sudden end, a sudden stop, a sudden drop, and a quick stop. Oof. Sorry to be so morbid. Only my really good listeners will know what I just said there. So yeah, I mean, there's more pain coming, but my Hex, are you not? You're giving me all the best pickup green signals. Like, whew, just buy me another green candle. I might have to take you home tonight. Oh, wait, I already did buy you. I am taking you home. Oh, I love my mask. I am my own bank. So yes, this is what I wanted to talk about. Was Hex finally getting sexy? Still, could we still drop to this red line? Yeah, but might we never see this green line again? Yeah, it feels like a 50-50, like a coin flip on whether we never even get down here again or we go all the way down to here. With those kinds of odds, do you want to miss the bottom waiting for cheaper Hex? I mean, if you're really, really amped that you think it's going to get cheaper, maybe just buy a little to hedge in case. I don't know. Not financial advice. I'm certainly not a financial advisor. I get my information from a troll under the bridge, fortune cookies, and rented chicken bones from Walmart. So, I wouldn't trust anything I say. I've got brain damage and no certifications. That's not true. I have a Cisco certification and a Hewlett-Packard computer engineering certification, and an HTML certification, and whatever. I dropped out of business school before I got my accounting finished. No CPA, no fiduciary responsibility. Wah! So don't listen to me. I could be driving you right off a cliff. No, if you want to do your own thinking and your own research based off of what I said, awesome. If you just like hearing me rant and speculating for entertainment, awesome. If you're here because you can't afford a financial advisor, I do not want responsibility for your bags. I do not tell anyone to do anything. I tell you what I'm doing, and I tell you what it looks like. And, oh, hey, so that's where, like, no one's come yelling at me like, oh, we lost money. Well, guess what? So did I. That would be my same reply. I'm new to this. However, I do seem to have some pretty good TA at this point after 6 months of working on it and practicing and downloading the financial market to understand futures and bonds and treasuries. Oh, my God, so much complicated language just to confuse people. Oh, and we should talk about this. XRP. Now, a lot of people are getting very bullish. It cracked over. I think it cracked a little too hard. Now, this would indicate gathering energy, but it's gathering energy as the RSI is overbought conditions. See, if it were gathering that energy over here where it was oversold conditions and it's not really going down any further, that means the moment the RSI pops up, so does the price. But alas, with the inverse of that, overbought for a while and the price is holding steady-ish. Well, when the RSI corrects down, greater chance of pulling the price back down. Now, XRP is getting closer to the lawsuit finishing, and it is altcoin season, and it got beat up for Sorry, we better change this. Is 1 week enough? I don't know if 1 week's enough. How zoomed out can we get on the weekly? Oh, we can get pretty zoomed out to 2017. All right, so XRP, all-time high, $3.32, December 25th. Wait, there we go. January 1st, at least that week, 2018. So it's been over 4 years since the all-time high. That means during the Bitcoin double top, every other coin making huge all-time new highs, XRP didn't. However, that being said, XRP didn't make all-time highs because it wasn't listed on Coinbase because of the securities lawsuit. It wasn't as promoted. It didn't have as much exposure. It was hard to get and trade because it wasn't directly listed. So that does a thing to a coin. And even in those conditions, it saw a pump like everything else, but it couldn't even break $2. So from 50 cents to $2, well, that's a 4x. $3, that's a 6x. You mean all this fighting, all this time, and these chart pops have hardly done anything since the 2017 era. Okay. And here is your long years standing repression line of resistance. So yay, you broke the short-term resistance because the macro trend is years long. Not months, not weeks, years. Is that very bullish for XRP? I don't think so. So even with lawsuit, when I look at the fact that XRP is meant as an institutional crypto, and institutions are about to see blue cap stock crashes, I have a funny feeling that, we're going to be looking at the bull run of 24-25, I think, before XRP actually decides to have its breakout. So in the meantime, anybody who's holding from here, sure, you might see some gains. But I wouldn't get too cozy with those gains myself. Always be booking profits if you're going to play degen. I don't play over in here, but I will comment on it. I will speculate on it because I'm sure you guys love to hear me speculate and do some TA. These things matter to other traders, and that is very clear. Not a bullish chart yet. And I mean, they all want to see it go off like this, but quantitative easing were the conditions. If the interest rates were at 0% and we didn't have Dark Powell and the lawsuit was coming in like it is for XRP, I would be a lot more bullish. But it's an institutional crypto, and institutions are about to get the crap kicked out of them and have negative GP for a lot longer than a few quarters. I think we're looking at the last couple of years before the Fed is able to get inflation properly under control and do any real reversals and try and get the economy re-going. But there are alt projects that will be seeing some of the gains. Like, this is where it's fun. I talk about Apple and Tesla both having to drop under 100 to be properly valued. But Netflix, I think maximum pain's around 150. That means I'm not even looking for a 50% correction of this price. That's right. I'm expecting a double bottom in Netflix. When the pain comes back around, it already hit maximum pain and lost years of gains. So I like when I look at things like this, and let's stop drawing with the brush. I forget to turn it back off when I've used it. And there. Now zero is right here. So, I mean, on the approach to zero, Netflix has done most of the pain. When Apple and Tesla crash and the entire stock market has capitulation, how much more pain do you think Netflix will see? And this is where which assets have already seen their pain. And HEX, oh my god, 95% off at one point, almost. That's maximum pain, it seems like. And I could be wrong. But like Hex is shoring up very nicely to the point where I'm not saying that these charts are going to moon. But when everything else crashes and you're like, there's no safe places to hide. Well, Lockheed Martin, Netflix, Hex, certain assets in the traditional market and in the crypto markets, I think are more likely to hold their value. And when they hold their value while everything else is crashing, well, then people will want to move their crashing value into the holding value. What happens when the holding value starts getting even more value? Oh, that's right. It starts going up in value. Funny how that works. So we'll see what we see when the capitulation comes, and it is coming. I feel it in my bones. But this is a feeling, folks. Like, for all the math I do, for all the logic I like to stand on, and for all the reasoning I have, the feeling, the tingling I'm having is that capitulation's coming. That massive bottom is coming. And when it hits, it's going to shake through the market. And that shake is going to show the good things and the bad things. And the bad things will continue to crash out and for a long time go nasty. But the good things will start getting normal stock market gains, like 10 or 20% a year instead of, 100. That's a 2x. As crypto people so obsessed with that. But even if everyone else is still going broke and assets are going down, if ours are holding value or going up 20% a year, we're still doing great. It's going to be a nasty, nasty market. So, am I expecting a huge reversal pattern? No. But this is literally, after this capitulation or during this capitulation, this is the DCA time to become Warren Buffett. So, Trevor, if you're making head watch this one, yeah, buddy, a buy time is coming. Buy time is coming. Start DCAing in Warren Buffett style and all those things you want. There'll be some good prices. I'll do some valuation videos and I'll try and keep the math low and the punctuations higher. All right, keep the entertainment value going. Maybe I'll even write down some jokes for a change. But I like situational humor mostly. Twitter's really good for cracking out my humor. I'm starting to get relaxed there. It's nice. So all you that have stayed till the end, congratulations. You get a gold star. Thanks for listening to my market views and my market thoughts, as this quarter should be significant amounts of pain. But by the pain in this quarter will give me a better indication of what Q1 will look like in 2023. And pretty much between this quarter 4 of 2022, and quarter 1, 2023, these are going to be the best buy times in key assets. And it's going to be risky. I'm going to be in there, I'm going to be playing, and I will tell you what I'm buying and when I'm buying it and why. And tell you some of the ththings I'm thinking about buying but haven't pulled the trigger on and why. And you can do your own research and make your own decisions. Alright? Because personally, I don't want you to buy anything I'm buying. That makes the price go up on me. And I'm broke. I need the price to stay down. So in fact, forget everything I said and don't buy anything I talked about, okay? I love you guys. Thanks for tuning in and staying all the way to the end. And as always, until next time, stay frosty.